it's been one of the strongest performing groups. We think there's good reason for that over time, but it's not immune from economic news and macroeconomics.
In terms of the valuations that the broader tech sector had got to, do you think that is that is a problem for why we're seeing it pull back at the moment?
I don't think valuations are a problem. I mean, you have to weigh a valuation with the fundamentals. And we see incredibly strong fundamentals, particularly in the e-commerce and payments universe, as well as in cloud computing. The way we think about it is for businesses to get through this difficult time in navigating this period before we have a vaccine and maybe even after we have a vaccine and we're waiting for that vaccine to be distributed and to take effect, businesses need to take advantage of the e-commerce infrastructure that we've built in around the world, and they need to take advantage of the cloud computing infrastructure in order to engage their employees at home, stay efficient, and also engage their customers and sell product to them online, maybe in a different way than they have in the past.
So let's talk through some names. Glenn, I see that Peloton is in your top 5 holdings in terms of long holdings. Is that still the case, even though we've seen such a tremendous run-up and you get worried about levels being too expensive? Or is that just a work-from-home sort of virus hedge, because it seems to go up every time we have a negative headline around COVID?
We model Peloton out 5 years really, and look at what the what the potential is for that company. They're very clear that they're bringing out a lower cost bike, lower cost treadmill that will expand the market. They talk about expanding to all aspects of fitness. So other modalities of exercise, probably if you look at some of the competitive products like a mirror or a tonal and strength, I'd expect over time Peloton to compete in those categories as well. When you look at the Peloton business, it's 7 or 8 times forward revenue. And that's something that to us does not look dramatically expensive. Even if we back out the hardware business and give that a 1 times multiple, we see a fast growing and recurring membership stream of $40 a month that the consumer's paying. And that's just an incredible business. We think that in a lot of ways that Peloton is the Netflix of exercise and of fitness. And we see great growth in front of them. So we continue to be strong shareholders in Peloton.
You mentioned that you like the payment space. Is that some names that we talk about often here, like PayPal and Square, or names abroad?
That's a good question. It's a little of both. PayPal is definitely one of our big investments there. Afterpay, which is traded in Australia, has been a big winner for Light Street this year. So the ability for the consumer to get financing of an individual purchase in their, right in the shopping cart from the e-commerce vendor, that's a huge growth business, and we're big fans of that company. Shopify, of course, is exposed to payments, so we see that as another way to play.
Shepard Smith here. Thanks for watching CNBC on YouTube.